All right. Hello, everybody. Welcome back to another episode of the Market Close. We are in a market where we essentially have ripped to the upside. And it's really interesting to see how this is playing out. We got a lot of macro things to discuss. As you can see right here, Tesla at 248, up 3%. S&P 500, 559. So we dumped a little bit, as you can see these red candles getting into the close. It was a really good day, still a good day, even if the S&P closes at 559. It's up a more normal 0.57% versus up about 1.3% in the morning. But we got to 563.67. And then typically Friday we see a sell-off. And so we're seeing a sell-off into the final 10 minutes. But overall, still incredible day. Palantir, $28, 1.3%. Nvidia, 129. Nvidia was at 132, still up, but not up as much. IWM is up as well. IWM and Nvidia almost are up the same amount. Nvidia up slightly more, but both small caps and large caps having a good day. SoFi at $7, the first $7 close potentially in about a month, which would be really nice to see on SoFi. You got HIMS, that's up 2% today. Open Door is up 10%. Southwest is up 2%. Archer Aviation, they had a deal with Southwest. They're up 11%. Square is up 3.75. Robinhood made a nice little comeback from 21.70 to 22.25. JetBlue up 3%. Palantir again, 28. And then Nvidia right here at 129. So as June said, amazing day. It was really interesting to just see in the beginning of the day, not a nasty sell-off, but definitely a sell-off, which was red. And then PPI data came in. Market didn't love the PPI data, but market didn't hate the PPI data. And because the market didn't hate the PPI data, it seemed like the market decided to just push forward. For those that didn't catch PPI, we had PPI of 2.6 versus 2.3, the highest since March 2023, which is a pretty tough headline to condense, but I guess the CPI that we got yesterday was enough for the market to not care. We also had bank earnings. And Rocket Lab. Yes, Rocket Lab also was incredible. So Rocket Lab right here, Rocket Lab at 565, up almost 6% on the day. We're actually going to have Matt Money join the stream in about 20 minutes. So he'll be on the market close and he'll just be on to talk about stocks and Rocket Lab as well, because that's one of his big positions. But the banks did well, even if their stocks are not doing amazing. JP Morgan, they're down about 1.52%. Wells Fargo, they're the ones that took a little bit more of the hit, down 6% because their net interest income being down 9% year over year. And then Citigroup ended up going red 1.65%. It was green in the beginning of the day. The point is the banks being red is not an indication of the banks being bad. Increase their dividend, increasing their buybacks, maintaining their CET1 ratios. The banks seem like they're in the right direction, even if their stocks are selling off simply because the stocks have had a good year, which hopefully means that Q2 earnings for the other tech companies are also going to be just like the banks, which are beats, hopefully a little bit better of a beat on the top and bottom line for companies like Nvidia and Amazon, et cetera. And as a result, the market will have more momentum to continue doing what it's doing. S&P 500 right here at 560. A 560 close would be pretty fun to see. And then QQQ at 494 at one point. This was at, I think, 502 on the day. So exciting stuff. Can you talk about Clove? It's been going well for the past 3 months. Clove, this is the Chamath one? I have not looked at this in a while. Let's look at it year to date. So Clover, beginning of the year was 60 cents, or that was April, 60 cents. Now it's at 153. Yeah, I don't think there's any fundamental reason. I don't know Clover that well, but if this one is pumping, I would imagine this one is a little bit more meme-ish. I could be wrong on that. SoundHound as well has had a really good week. SoundHound right here up 16% again today. Their catalyst was AI chatbots in Europe. I'm assuming there had to be some more partnerships that allowed them to gain momentum. But in terms of Clover, I mean, it's nice that it's up, but I don't trust that company at all, given what's happened since 2021. Again, I said this in the morning. The only SPAC I would put my money in from 2021 would be SoFi, not Open Door, not Clover, but SoFi, because I think you got to give enough respect to Anthony Noto for the company he's built. $6.97, a $7 close on SoFi would be awesome. And so let's see if we get it. Meta back to 500. Yeah, that was fun to see. Meta fell. That was the one thing I forgot to tell TJ, that when it was down at like 495, maybe we should have sold puts on Meta this morning, but I literally just forgot about it. But I'm sure the premiums today were decent on those puts back to like 460 or 470. I think Meta's going to have a good earnings. The downgrade they got today, I still haven't seen the downgrade, but I doubt it's anything that substantial compared to like the 7 upgrades they got over the past 2 weeks. And the highest upgrade was $650. So, I mean, the street definitely feels there is some momentum on Meta. So that's what we got in the context of the broader market. And it was overall not too bad. Before we get into the close, let's get an update on Bezos. A decent amount of Amazon shares. That's probably the reason why Amazon has not been able to crack 200. So let's get an update from that, and then we'll keep going from there.
He's selling more shares of Amazon. Wealth editor Robert Frank joins us. He's got the numbers. Why is he selling all this stock? Any idea, Robert?
Not yet, David. I mean, look at the stock price. It certainly is a good time to sell. Now, let's put this in a little perspective. So back in March, remember, Bezos filed a plan to sell $8.5 billion by the end of the year. He sold that in just a matter of weeks. And then earlier this month, he filed a second plan to sell an additional $5 billion by the end of the year. So that will bring his total, if he sells that entire $5 billion, to $13 billion in total sales just this year. And he's already working on that $5 billion tranche very quickly. Over the past week, he has sold in 3 tranches. He had one last Friday, 2 this week. That was Tuesday and Wednesday, totaling about $1.2 billion for the week. He will now only own about 9% of Amazon shares, still clearly the largest individual holder. Now, the big question, as you mentioned, David, is what is he going to do, or what is he doing with all this cash? Now, maybe he's using it to fund some of Blue Origin. That's a space company. That is a very expensive endeavor. He's also purchased $200 million of land in Miami. That's to build a new house. He and his fiancée, Lauren Sanchez, they've been spending some of the summer on his $500 million yacht off the coast of Greece, but he is saving a lot in state taxes. Now, remember, he moved from Seattle to Florida last year. He will have saved, by the end of all these sales, nearly $1 billion in state taxes by making that move to Florida in stock sales. We should also add, guys, Mackenzie Scott received all those Amazon shares as part of their divorce settlement. She is worth $40 billion, and that is after she gave away $17 billion to charity.
Just crazy numbers, dude. It's just like throwing around numbers at this point. It's pretty hilarious. But I think the main reason he's selling is I don't think it's because he thinks Amazon is overvalued or anything. I think it's the Blue Origin stuff, which obviously has not performed as well in the context of SpaceX, and they need capital, and Bezos has capital. He also still will own 9% of Amazon, so he'll still own close to $200 billion, even if even after these sells. And in general, we're seeing a lot of insiders, we saw them this morning, start to take profits. Even if it's a small part of their net worth, they are taking profits, which is reasonable after a pretty big run. Another piece of news we got, Germany has officially sold off all of their Bitcoin. All of it. It's gone. 42,000 Bitcoin gone in a week. The German government does not own any more Bitcoin. That was the selling pressure we saw this morning, likely from Germany. So Bitcoin is gone for Germany. I kind of think this is bullish because we are moving past a headwind that was Germany clouding out the Bitcoin train. Now we just have to get Mt. Gox to get through all their liquidations, and then we're done and we're good to go. And maybe Germany can move forward. But Bitcoin ate it as a champ. I mean, like, if you told me Germany was going to sell 42,000 Bitcoin in a week and Bitcoin was going to fall 3% this week and obviously 20% for the past month, like, it sucks, but it's not like it's back down in the 30s or anything like that. And there's plenty of buyers willing to bid even as it sold off. So hopefully that is a catalyst going into the rate cut for September for Bitcoin to have momentum. And if we get a nice run, 80, 90K towards the end of the year, a lot of the Bitcoin proxies are also going to benefit, like a MicroStrategy that announced a 10-for-1 split. And there'll be some momentum in a lot of those stocks. 4 p.m., July 12th, Friday. Thank you, everybody, for being here. The stock market is now closed. All right, let's see where we ended out on this close. So we got Qs ending 494. This week, I believe they are up about 3%, which is not too bad. Yeah, about 3%. So not bad for the week. Rocket Lab 565, nice 6% day on Rocket Lab. S&P ends at 559.9. Again, it was in strength at 563. And then about an hour later, we come back down to 559, but definitely not as low as the 555 range that we saw yesterday. Meta 498. SoFi ends at 697, up 3%. I mean, still good. It's not $7, but 697 is way better than 615, which was this week. So nice on SoFi. Robinhood 22.28 at the bell. Palantir, wow, a $28 close. There you go. Topped at 28.13, bottomed was at 27.20 today, 28.07 at the bell. We still have after hours, but we'll see if that can finish off the day at 28. That would be two $28 closes for the first time since 2021. Again, a Palantir just showing that it has strength and people are willing to bid in the 27 range and definitely in the high 28s or the low 28s. So not bad for Palantir. Palantir movement is absolutely bullish. I agree. I mean, this is the most bullish Palantir action I think we've seen all 6 months, quite frankly, because maintaining this high of a range with no news, obviously the catalyst we've had, but no earnings or substantial news like that. It's pretty incredible. It just means people want more exposure. IWM ends the week up 5%, up 1.16%. TFC, this stock did great, $40.54, now back in that $40 range. We were talking about this at around $25 when Chris got really excited about this a year ago. And it's obviously performed because rate cuts look like they're going to come, and that ultimately is going to help banks. Carnival Cruise, that one's up 1% today, 18.23. Southwest, 27.53. HIMS, 21.71. It seems like the short report on HIMS that came out 2 weeks ago apparently doesn't matter, and the street didn't care too much about it. So it dipped back to 16, but back to these same levels after the street kind of digested that report. TNA, this one was a great one, up 3%. This is up 17% for the month, given IWM has done well. CRM, 254 today. Enovix, 1812, up 2%. Really, a lot of green. I mean, AMD was red because AMD's had a good week, but most stocks today were green, even if they were slightly green. And they were able to benefit from the CPI data we got yesterday. Max 7, we had NVIDIA green, Tesla green at 248. We'll talk about Tesla in a second. Google was sort of flat, down a little bit. Amazon was down a little bit. Microsoft was down, same a little bit, 0.22%. And then Apple was up 1.3% on the day. June says it was a $17,000 gain today. At one point, it was $24,000 on the day. Yeah, it was a good day, dude. It was a good Friday. I didn't expect this Friday to be as good as it was. Really did not expect it to be that good. Nathan says, amid the Bitcoin being sold by Germany was confiscated from organized crime groups. So people have been saying, it doesn't matter that they sold because it wasn't really their Bitcoin because it was their cost basis was zero, right? They got it from organized crime groups. I agree, but my point is if someone gave you 42,000 Bitcoin for free, or you stole it, whatever, you confiscated it, why would you sell it? I get, but it to me, it's like if Germany had someone who understood Bitcoin and was on their chiefs of staff, that is the person who decides to sell the Bitcoin or not, maybe they could have just been like, hey, let's just not do that right now. I know we have a beautiful cost basis, which is zero, but why don't we just hold on a little bit? Because there's all these catalysts. But they didn't. And my question is how much money did they really get from that was so important? A country's budget is they spend billions of dollars daily on healthcare and all this random stuff. I doubt the Bitcoin sale funded that much for them, where the risk to reward of holding it, even if it went down, given your cost base is zero, was that much substantially higher than actually selling it and taking profits. So I don't know. That one didn't make sense to me, but they're gone and they're out of the picture. Palantir right here at 28.07. Snowflake had a horrible day. Snowflake, it was down 4% at one point. Now it's down 1.74%. They had a data leak with AT&T, and it was bad. I was reading a little bit more about it after the market opened. It was not good. And a couple of reporters that cover SaaS were just like, this is just not a good thing. And the worst accusation was that Snowflake knew about this back when Frank Slootman left 5 months ago. So, and if it comes out to be true that they didn't know about this and they didn't do any material disclosures, you could have lawsuits by shareholders. So there's a lot of stuff that could happen with Snowflake, and we'll have to see how that story continues to play out. Because governments aren't traders. Well, if governments aren't traders, then doesn't that mean hold it? By the way, the United States, doesn't Germany copy a lot of stuff that happens in the United States? If the United States isn't selling our Bitcoin, then maybe those countries should just copy us and just hold. If the United States sold Bitcoin, I would understand why they sold Bitcoin, because they're like, oh, if the United States doesn't believe in it, then we shouldn't believe in it. But if we're holding, we're hodling, maybe the other European countries should hodl as well. Okay, let's get an update on Tesla, and then we'll keep going from there. Here's Gene Munster on why Tesla breaking the streak of losing has been really important over the past couple of weeks.
Reportedly postponing its planned robo-taxi event. The delay, which would push the reveal from next month to October, leaves the stock as one of the biggest losers in the S&P for the week, although it's still doing quite well for the month. Our next guest calls it a non-event, believing the EV maker stock is going to double. Joining us now, Deepwater Asset Management's Gene Munster. Gene, why is it a non-event? I mean, if there's any history here, it's a history of delays and of unfulfilled promises when it comes to full self-driving.
The history is the reason why this is a non-event is that they occasionally postpone their actual events. Keep in mind, Elon kind of did this off the cuff, announced this event out of a reaction to a Reuters report about a discontinued low-end vehicle. And so I think that
is a good point. When Elon announced 8.8, it was the day that Reuters published their quote unquote fake news. So, some people were saying Elon just said that to say that, and then he told the Tesla team to figure it out. You could probably conclude that there was never any real event happening. But it was a hell of a thing to tweet because he got the stock to pump up to 250.
Was hastily planned, but they typically or sometimes delay these events, but they always, and I choose that word carefully, delay product announcement or product launches and the subsequent ramps. And if you look at that breadth is eventually they will get acceleration from these products. As far as FSD, that undoubtedly is still this question that is begging, that's been delayed. Elon famously in 2017 said that FSD would be available by the end of the year. And at their first AI event, he talked about 1 million robo-taxis in 9 months. So it's a non-event, David, because this is a very well-traveled road. And ultimately, the reason why the stock is rallying back here is investors are asking a simple question. Do they believe that transportation eventually is going to have an autonomy angle to it? And what is Tesla's position? And my view on that is absolutely in the future, transportation will be autonomous. And I think Tesla has a pole position in terms of capturing that opportunity.
So it doesn't matter as much as whether it's coming. It doesn't matter as much as when it's coming, Gene. I mean, I would think for a discounted cash flow model or anything else you want to sort of try and determine value, you've got to have some date in mind where this is going to actually begin to contribute to revenues and cash flow.
You do, and it's probably 27 or 28, and I just want to put some context. You mentioned earlier about the potential for this stock to double. Right now, the company is going to do about $100 million in revenue. By 2027, that will be about $100 billion. By 2027, that should be $170 billion. An 8.5 multiple on that, that's a similar revenue multiple that Apple gets, kind of yields a double from here. But I think that that's kind of the year that investors should be focused on is 2027, which means we're probably a year away from fully discounting that. But keep in mind that 2027 benefits from 2 factors. First is accelerating demand for vehicles, whether it's for consumer-owned vehicles or fleet vehicles. And separately, and more importantly, of course, is margin expansion. I believe that autonomy is a killer app when it comes to transportation. I think that they will have higher margins because of that. So answer your question, David, I think it's 2027, and I think that's going to get progressively discounted in the stock over the next year.
What about the humanoid robots? How do you factor that into the valuation, total addressable market, and potential for profitability, or is it just too early?
It's not too early for investors who have a 5-year time window. And think of this as the AI cake. There's 3 layers to it. The first is just FSD. The second layer, I said that's probably 26, 27. The second is fleets. That's probably 27. And then the frosting layer, the sweetest layer on that is Optimist. At this point, it is an eye roller, a potential punchline of a joke for many investors. But Optimist does hold an opportunity that could create more value than the collective business altogether. And when you think about the concept of really automating work across the board, I think that that is a massive opportunity. This is still an $800 billion company. There are $3.5 trillion companies that I think are doing less to advance humanity. And so I think that Optimus should be part of the conversation, although it's not today.
And my belief is that if Elon actually comes out on the earnings and has any update on Optimus, that is substantial, even if it's just working in the factory, which would still be substantial. I think that would be news that Wall Street would have to digest for Tesla. One update, Facebook has removed all restrictions from Donald Trump's accounts. I believe this is the first time since 2021 if I'm not wrong. So first time in a few years, they've officially removed restrictions. I think I could be wrong on that. They might have done it a little bit earlier, but apparently it is now officially he's allowed to come back. And that's probably because they think he's going to be the nominee. And if he's going to be the nominee, they probably don't want to be the company that's like not allowing him to post. So that's an argument there from Facebook and Trump. And then one other thing on Tesla, although they got upgraded today by Citi, UBS downgraded them to sell, but they did raise the price target from 147 to 197. So we're seeing price target increases even if we're not getting the most bullish upgrades. They said right here, after evaluating the different businesses we can more substantially value, we are still left with a less than $500 billion stub for future growth at current levels. Even with a 5-year time horizon, this implies a future value of $1 trillion just to justify current levels. A larger opportunity would be needed to justify a buy rating. All right, let's have someone join the stream who's coming onto the market close to discuss all things Rocket Lab, but also let's get his thoughts first on Tesla, given we just heard the bull case for Tesla. Ladies and gentlemen, Matt Money.
How we doing?
What's up, Matt?
Every time I come on the stream, I'm like, I don't know if I'm looking at a GQ magazine or what's the deal, because
I can say the same to you every time Palantir Weekly.
I paid you too much to say that. I paid you
Okay, before we get into your stock that's doing great today, so we have a lot to talk about that. Quick thoughts on Tesla. Do you think, I've been asking everyone this who comes on the show, do you think this is a meme stock rally for Tesla?
I don't think it's a meme stock. I mean, I think it's the juice. I think it's what everyone's been waiting for. Everyone's been really hyping up full self-driving. Everyone's been really waiting for the robo-taxi to get unveiled. So I think it's warranted. Do I necessarily think it's an appropriate valuation? I still think it's overvalued. I have been.
So you wouldn't buy it at 250 today? You would not buy it?
No, but I would say I did make a mistake here, and I always own up to my mistakes. I was planning on, when it was, about a month ago, but when it was in the 160 range, I was thinking about selling puts, and I never did. And I always said I would wait till it get to 150, and it hit 150. And that's just the market, right? Market's never going to wait for you. Because I was upset, because my thought process was, I said, 150 is a good number. Do I think it should be 150? No, I think it should be closer to 100. But that's just the way it is, right? You have a great quality company. I think that the Tesla can turn on a dime, even though they're allowing their margins to shrink to be able to get a lot of inventory out there. I think they could easily ramp those bad boys back up, and people will still buy it. They have really good brand recognition as well. Yeah. So I'm always a hater on the market cap of the company, but I just think it's absolutely phenomenal what Elon and the team have done over the past 10 years. It's really been something to watch. There's very few stories out there where you could say, holy crap, like these guys saw a vision. They took a calculated piece of risk, and they absolutely did phenomenal.
So let's talk about this one. This one had a hell of a day. And this is the fun thing about championing and campaigning a stock when no one else cares, which you were doing in the low threes for Rocket Lab. Because when the stock does explode, if it ever does explode, you get to be the person that says, well, I think, I saw a little bit more than other people saw, which is the edge that everyone needs in the stock picking game. Rocket Lab up 6% today, 565. Is this macro driven? Is there something fundamental here? And do you think it sells off back to the fours like it has many times, or can it maintain these levels?
I think it'll eventually cool off. I think the thing that people are really looking forward to is there's a big race right now with folks getting their medium launch vehicles out onto the pad, and Rocket Lab is no different. And they're actually testing their medium launch vehicle engine, the Archimedes engine, in Stennis, which is in Virginia. And so it's on the test stand at the moment. There's been intermittent releases of those testing since May, and everyone's just waiting for them to hit the ignite button to actually see the hot fire test. And eventually, I think that's really what it is. You've seen probably over the past 3 months, it's up about 40%, and I think a lot of it has to do with the fact that it is on the test stand, and I think people are really imminently waiting that. After that piece, it really is the race to basically putting the rocket on the pad and igniting it. I think the moat here is, comparatively to, say, other companies, one, majority of them aren't publicly traded. SpaceX, Relativity, and a few others to mention as well. Rocket Lab has a very successful small launch vehicle. They're about to launch for the 51st time here next week. And they've had 50 successful, not all successful, but 50 launches, and about 95% of them have been successful. So they have a very good success rate. And so I think that is their moat, right? A lot of these other folks, they might have launched 1 or 2 vehicles and maybe up to 5, several of which may have been successful. But these guys have 50 launches. You know, you don't even have United Launch Alliance, which is a commingle of 2 massive aerospace companies having 50 launches under their belts for major programs like Pegasus, etc. Really, the only other people that have had 50 launches plus is SpaceX. And so you think, you know, is it? You ask the question: is it going to pull back? I'm sure it'll pull back, right? This is
But
just
why did it run today? What was the reason for that?
I think everyone's imminently waiting the release of the hot fire test, and I think a lot of people are still kind of on the edge of their seat. They recognize that it's getting closer and closer. That once you kind of get this hot fire test, it's basically all hands on deck to next year get the medium launch vehicle in the air, and that medium launch vehicle. And this is where there's, you know, peaks and troughs, right? So if anybody's interested, you know, if you think it's a run up a little bit, I do think there's an opportunity after this hot fire test and maybe after the Q2 earnings, things will kind of pull back a little bit, I'm sure. That's my thought. I've been in the stock since 2021, so I've seen it go up, I've seen it go down. But I think your window is closing, right? And it has been this way for a while. If you asked me 6 months or a year ago, I would have said you had 18 to 24 months. Now I'm saying you have 12 to 18 months. Really, once that medium launch vehicle goes, I see the stock at $15. And I very am strongly.
What is the probability on the medium launch vehicle actually succeeding to you?
The probability, the first time or just in general?
I mean, like, because if it doesn't work the first time, I'm assuming the stock falls 30% that day, right?
Oh, for sure. Yeah, it'll be tough. It'll be tough. But these guys have the capital, right? They have $500 million in the bank, cash. And with that means I'm sure that it costs them $20-30 million to build each rocket, right? But these guys were very successful in the Electron rocket, right? I think they had an initial test. I don't think it necessarily went well, but the second one has been really good. And all the remaining 50 have been really well received as well. There's been some anomalies along the way. So I think they've lost like maybe 3 or 4 out of the 50. So generally speaking, extremely successful launch campaign. Even if the first one fails, and keep in mind, this is going to be a reusable rocket as well. So some people are like, oh, it's not going to be as large as the Falcon 9. The Falcon 9 also costs $70 to $75 million to launch. This one's going to cost $50 to $55 million. It's an appropriate time. But to get back to your answer, I don't think it's a high likelihood that this will fail. I give it like a 95% success rate overall that it'll work. The first time though, it's rocket science, right? I mean, who knows what the hell the first time it'll do, but I guarantee I'm 95% certain that these guys have the capability to be able to get a medium launch vehicle into space. I've seen a lot less competent folks do the same, and these guys have already launched something into space 50 times.
And you talked to the CEO. He told you to your face that they're trying their hardest to win. So
yeah, these guys are, you know, take it as you see it. These guys, when you talk to them, they're trying to emulate SpaceX, right? They're trying to be an end-to-end space company. 2/3 of their revenue, you know, even let's just take, for example, the worst case scenario, right? Worst case scenario, they spent $200 million to get a medium launch vehicle on the pad. It doesn't work. Well, luckily, you know, they're going to make $450 million of revenue this year. 2/3 of that is space systems. So that's star trackers, that's reaction wheels, that's all these different components for satellites. And these guys are also creating satellites for NASA, the Department of Defense, and all that. So launch is important, and it'll really help with the revenue side, because if you think about it, let's take a step back. You know, you're getting $8.5 to $9 million for an Electron launch. You're getting $50 to $55 million for a Neutron launch. So yes, it's 6 times the revenue for one launch. I get it. But at the end of the day, it doesn't mean that they don't have other revenue streams. And so, and those other revenue streams are at a gross margin of 30% and growing. So I think it's getting to a place now, kind of like, you know, the kind of stocks I invest in, right? The companies that are getting
Stocks
to the
that
place
go up.
Well, but
Next time anyone asks me what type of stocks do you invest, I'm like, stocks that go up.
stocks. Well, I remember when we had the SoFi conversation and like the Palantir and etc. with Jeremy. He was just like, I invest in companies that make money, Matt. And I was like, shit, he's got a point. Like, so I should. But anyway, I'll get off my box after this one because I know I've been hogging the mic. But I look at companies that are growing revenue, their gross margin is increasing, and they're getting closer and closer to EBITDA break even.
Right.
And if you recall, 12 to 18 months ago, Palantir was in the same position. SoFi was in the same position. I kind of stood out of SoFi until they got to the place where they're EBITDA positive. Dutch Bros is getting to the place where their EBITDA is absolutely climbing. They're already EBITDA positive. And
I forgot you were in Dutch Bros. You like that one, yeah.
I like Bros. Yeah, this is Dutch Bros right here. It's pretty good. They're expanding like crazy. I can't wait till they get to the East Coast. Everyone's like, oh, they're gonna get their assholes beaten up, and it's like, well, you know, they're expanding pretty crazy.
Dude, the only thing we have on the East Coast is Dunkin', and if they can give a better experience than Dunkin', I think they don't have to get beat.
You'll be surprised. Do you like lemonade?
I love lemonade. Yeah.
You like energy drinks? Well, you don't like Celsius, but
I like Red Bull. Not Celsius.
You like Red Bull? Yeah. So that they got. Have you tried the new energy drink from Starbucks?
No, I've never had an
Don't.
Energy
It's bad. It's bad. So this is an energy drink from Dutch Bros, and it's one of the favorite things that I do like. And Starbucks was like, let me try to replicate it. They came out with 2 flavors. I tried the one, and I was like, I'm never ordering this again. It was awful.
Yeah.
So anyway. Enough about Rock Lab and Bros and everything like that. How are things with you? I'm sure your portfolio is doing well. When are you hitting $1 million, my guy?
I think, well, well, by the end of the year, and not 1 million, but we're getting substantially farther than we were at the beginning of the year.
You're doing phenomenal. Keep it up. That's all.
Things have to play out. That's the scary part about this market is like, and I know you and Chris were talking about this on Cash Flow Chronicles yesterday. It's like things have to keep up. So let's transition to this macro, and then I want to ask you about SoFi and Palantir. Protecting your gains is so important, right? We've all had a pretty decent year, and I'm waiting till the end of the year. I'm letting this thing play out, and I'm kind of going big or go home on this one. But do you think we end up with a 5,900 on the S&P, or do you think large cap takes a break and we go to small caps? How do you think the end of the year, given the CPI data we got, plays out? Like Google's at 185 right now. Is Google at 210 easily at the end of the year, or is it back at 165? Where do you think that is emblematic of the broader market?
I always like listening to Tom Lee. He's the kind of 5,800 bull, right? But it's all run. It's hard to say. If you ask me this question in a month after we've gotten some earnings through, but as you kind of saw, like you iterated it perfectly. Banks are their margins are starting to shrink. Their net income margins are starting to shrink. I wouldn't be surprised. A lot of companies at this point, their net income margins are starting to shrink. And so unless they do some price corrections with stuff, but you can't bet against Google. But this is the problem. You can't bet against Google, right? It's going to be growing.
I feel like you can't bet against any of the Mag 7.
You can't. But at the same time, it's like they've all run so much. That's the problem. Yeah, their multiples have expanded so much that they really need to grow into it. And so, honestly, I see a 5 to 10% correction in a lot of them after earnings, because I think what we've priced in has been exuberance, right? And to me, that means 5 to 10% pullback, by the way, is still way ahead of where it was 6 months ago.
That's the hard part to deal with.
That's the hard part that I think a lot of people are going to be like, oh my God, it's going to fall after earnings. And it's like, but at the same time, so these things are just monsters. And I don't see anything slowing down Google at the moment or Amazon. I use more Amazon every day, getting things sent to the house. So it's tough in that respect because they have such great businesses. They have the web services business, and then they also have just the normal retail business. And the retail business is printing cash at this point as well. They're actually making income from it. So it's really tough.
That's the thing. I think Max 7 has run up tremendously. Obviously, Tesla in the past month, but the question's going to be, and that's why today was so confusing. Like, NVIDIA was down, IWM was up. Then NVIDIA decides to go green up to 136. IWM chills off, which is the small caps. Then NVIDIA dumps kind of to the close and only goes up to 129. So I think the broader question is after earnings, which is what you're saying, how substantial is the beat? Like Google's, I think, projected to do 85 billion. Does Google pull up 87? Do they beat by $2 billion enough to the point where the street is just like, we cannot ignore this? Or do they deliver 85.1 or maybe 84.8? And the street's like, well, 29 PE is, it deserves to come down 5-10%.
Do you know how much 85 would be year over year?
It's like 9% or something. It's not a ton. I mean, it's a lot for Google, but it's not like
yeah, I'd have to dive deeper into the numbers. But I think even if they beat and they only beat by 9 or 10%, that's gonna mark a sell-off. Like,
you think if they beat by 10%, they would still sell off?
Yeah, I mean, I don't know what the numbers are, right? But I think if they're only up 10% year over year in terms of revenue, that's a massive sell-off. Because if you don't generate, Google's trading at a 28, 29 multiple right now, and generally it sits at, yes, they're forecast at 84 billion. I don't know what it was 2Q last year. That's something to look at. But if it's only 9 or 10% growth year over year, then even if they hit the target, that's going to be a massive sell-off.
So they beat by about 2 billion last quarter, and the stock, and they said the dividend, that's what got the stock pumping.
Yeah.
And they're going to pull in, the street's expecting 354 billion of revenue. So I mean, like, yeah, I feel.
What does that graphic say? Is that forecasting?
That's EPS forecast. Yeah. So they're forecasting. So what's this? First quarter, they're forecasting a 9% beat on EPS. Sorry. We're in Q2, Q3. It's a 17% year-over-year growth in EPS.
That's Q3.
That's Q3.
Yeah.
So Q2, 27%.
So
$1.83. That's what the street.
If they hit 27%, then I think they'll be fine.
I mean, the question is, will they actually? Yeah,
that's a huge. I mean, in terms of buybacks as well. So, if they actually hit 20-something%, then I think it warrants it, because generally, even at like 9-10% growth year over year, Google was kind of hanging into the 22 to 25 times multiple. So, if they're actually growing at closer to 30, 25 to 30%, then it warrants a 28% multiple.
Which of the Max 7 do you think is the cheapest right now?
Is the cheapest?
Yeah. In whatever metric you define cheap. I don't think it's Apple. I definitely don't think it's NVIDIA or Tesla. I kind of feel like it's Meta.
I haven't looked at Microsoft or Meta in a while. Microsoft is always kind of expensive, so unless it's come down.
I don't think it's Microsoft. They're still in the
450s,
you know.
I mean, I'm always just a Google and Amazon guy, but honestly, I'm just going to be blunt. Like, I haven't looked at much at Meta. I've been waiting for a big pullback in Meta.
Okay, let me transition to our good friend, which I don't think we're gonna have the weekly today, by the way, because like 3 people can't make it.
Okay.
So, guys, this is basically, we'll spend 10 minutes here discussing Palantir.
Welcome to Palantir Weekly.
Welcome to Palantir Weekly. 2807. Are you of the mindset that this is like my ex-girlfriend who said it's too quick, too fast?
I have the same problem. So you're good there. I think it's too quick, too fast. Do I think $28 is achievable for Palantir? Absolutely. I just,
dude, 20% in a month, 23% is pretty.
It's kind of wild. I don't hate it. It's, now $130,000, $140,000 position, whatever it is in my portfolio.
Why does Chad always walk into me making a cringy joke every time, bro?
Chad's like, I don't know if we should have this guy on a camera.
No. Not
on
only
our
does
YouTube channel.
By the way, guys, Chad just did a new Palantir podcast. We'll watch that at the end. I was going to watch that at the end of the market close.
Did he?
Yeah, he did. We could watch it together.
I like Chad. He's a good guy.
He always walks in when we talk about Palantir. For some reason, his bat signal goes off, and then I'm making a stupid joke, and then he walks in, and then he's just like, "What the fuck is going on?" So
I can't wait. He's gonna show it to Carp, and he's gonna be like, "Look at this. This is the guy you want." I know he's got nice hair, but I mean,
So what do you? I mean, like, what do you think is causing the run to 28 right now?
I think people are just opening their eyes and recognize that it's a great piece of software. And the thing that I think people are starting to recognize that more and more companies are getting involved. They're starting to recognize that it's made to suit and it's different than other products on the market. And so I also think that people are still going back to and giving a lot of valuation to Snowflake and Databricks. So I think that's also helping. But I think that honestly, the big piece about it is people are really opening their eyes and recognizing that Palantir's here to stay. It's not some sort of black box. It's something way more than that. And at the end of the day, it's going to be growing. And so $28 is too much, right?
So you think 63 billion and 28 times price to sales, or 27, is excessive for 20% growth, essentially?
Yeah,
why do you say it's too much? Is my question. Why?
If they come out and they magically say 25 to 30% growth, I'd be like, $28. I'm all about it, But I just think for where we're at right now, 20% year-over-year growth, it's just too ahead of the times. You have to think at the end of the year, in terms of free cash, they're going to be able to generate back to the balance sheet. They're at about what, 4 billion-ish now, 4.2 billion now. They're going to be at 5 billion by the end of the year. For a company making $1 billion in EBITDA and cash back to the business, that's 63 times, that's cash price to EBITDA, right? So if it was growing at something like a 30% pace, I'd be more comfortable. It's growing at a 20% pace. That's comparable to Google, and Google's trading, if you think about it in that perspective, at closer to 25 to 30x price to EBITDA. So, why is it
justifies those multiples is the growth, and that's the black box right now. Are we going to get the growth?
Yeah, I mean, I would hope that there's some magic thing that shows up, and it magically shows up at a 40% year-over-year growth pace, right? And next thing you know, I'm sitting here looking like an idiot in 3 weeks when earnings come out. But I don't know. I think it's tough. I think we've been at a year now. So the things that I could see where I'm eating my words in the 3 weeks, this is where I see I could be. We're at a year now of AIP being fully deployed. We know there's a lag time of 12 to 18 months before you start to get serious revenue generation.
Right.
And so, remember when everyone was giving carp crap about 4 billion, in terms of revenue by 2025? Yep. Maybe he's right. And we have a massive influx of revenue in the next 6 to 12 months because now you're starting to actually generate massive amounts of capital from those however many customers it's been, the 1,000 or so boot camps that it's been. And now you start getting that revenue. It's like, oh crap, now you have this wave of revenue that just comes up. But I don't know. I'm cautiously pessimistic that won't happen. I think that this is more of a company, and I hope to eat my words, that is more of like a steady 15 to 25% growth year over year, and it'll ebb and flow. And
do you think it could be like Amazon over time? I remember you made that really good Twitter thread months ago. Yeah. Palantir could be like the next AWS, where Amazon was always overvalued on price to sales, PE, price to free cash flow, but it kind of grew into the value. And now people are dying to like see it get to that 220 level. Most of the street thinks it can get there. Even though the PE would be like closer to 80. Do you think Palantir could be that company where it's just cool, so people are going to buy it, but it'll always be a little expensive?
It could be. Yeah. I mean, if you're going back to that relation, I think there was a time where Amazon was severely overvalued and it really underperformed the rest of the Magnificent Seven, if you think about it, over like the past 3 to 4 years.
Yeah.
And now it's starting to grow again. And so everyone's just like, ha, 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 ha. But it's like, no, it just hit and outpaced 2021 highs if you look at it over the past 5 years. And I think everyone's kind of sitting there being like, oh, it's just been growing and growing. It's like, no, pre-split, it was at like 3,400, 3,600, and then it split and then it tanked in 2022.
Yep.
So unlike Meta and many of the other companies, it just got to a place where it's hitting all-time highs and has severely underperformed the rest of the Magnificent Seven. And I could honestly see Palantir doing something like that. People started to really open their eyes. And then, you have all these folks getting involved after the S&P 500 inclusion and all the institutional investors, and you have people taking a lot of capital after that large run up, because all it is buying and selling, right? It's supply demand. Then it might, underperform for 3 to 4 years comparatively, maybe to some of the other software stocks, Snow or Databricks when they eventually IPO. And then after it catches up, because the margins are so good on this, I anticipate, the net income margins are eventually going to get closer to 40 to 50%.
Yeah, it's at 36 right now. I mean,
it's going to be insane. And so when you get to $10 billion, like these guys are so capitally efficient comparatively to their competitors. It's insane. And I say competitors loosely. Chad did a really good tweet earlier about how they're competitors, but they're not competitors. And I agree with that wholly, by the way. I was nodding my head reading the whole thing. And
for those that don't know, Matt actually uses Palantir's.
Yeah, no, I do use Palantir. It's a great time. I actually just hit refresh, not on this computer because this is my personal computer, but I hit refresh and I was looking at one of our wells ramping up about 30 minutes ago. But I don't know. It's tough. It depends on what you're looking at, right? And I go back to this all the time. I invested in Palantir for 2030. I didn't invest in it for 2024, 2025. I would say it's performed better than I expected. I expected it to be like a 20-ish% year over year kind of growth. We had some lost years in 2022, as you know. But I bought in a lot of my shares at 10, and I think my cost basis total is 13 on 4,500 shares. It's not enough shares, but it's enough to kind of make some of a difference.
No, it's not bad.
I think if you're looking 10 years down the road, $28, you'll be laughing.
Yeah, I agree. That's my thing as well.
And you know this already. It's like I have 4,500 shares, but I'm sad I don't have more.
But see, 10 months from now, $28 might make you look stupid or smart. But 10 years from now, I think it's definitely going to make you look smart.
Oh, yeah. Would you say a year from now?
I mean,
a year from now,
if we have a recession, that's the question.
Okay.
Right?
If we have a recession,
I think we're probably not getting to 40, 50 like people think in a year. But then the whole market tanks. And so, it is what it is. If we don't have recession, clear blue skies, J Powell lands the soft landing. Yeah, I think in the next 4 or 5 years, we're past the 20s at least. Now we're past the teens. Like we haven't seen the teens in 8 months.
Mm-hmm. Maybe
we're past the 20s.
I don't know. Yeah, 5 years down the road, easily. This is stupid cheap. I agree. I don't know. I don't disagree wholly with what Chris says. I think it's a little bit overvalued here. I have a year-end target for $25. And I think
everyone agrees it's a little overvalued here. Everyone feels it.
And my Seeking Alpha article that I wrote, which I need to update, it was like February or March. I said 25 is appropriate, and it'll hang out between 20 and 30 throughout the year. But I think 25 is appropriate. So I'm looking for them to hopefully get above 20% year over year growth, and I would love to reevaluate my $25 price target.
I said this on the Daily Palantir episode 2 days ago, but as Guitar Littlefield says, 10 long years. If you just like covering the stock, like being part of the journey, then 28, 25, 24, 14, it's like if you got 10 years of holding this bad boy, it's the one thing in investing that gives me so much ease of mind. Like when you do the option and you have it expiring next week, it's like, all right, you're focused on that. When you have something that, as you said, 2030, you're just like, all right, which is what you did on Amazon and Google so well over the past 5-6 years, which is why you're sitting on heavy positions and good averages.
I add capital to the market all the time. And, I've been fortunate that I had a lot of stocks that I wanted to get out of at the right time in 2022, and I repositioned. And now some of those positions are up 100%. It's been a lot of fun.
Let me ask you about a stock you got pressured into buying. I think you have 2,000 shares, right?
Yeah, like 2,300 shares. Yeah, pressured. Yeah.
Okay. What do you think about SoFi? What are your thoughts on it now?
I think it's the same thing of how do I say it? It's different than Palantir, so I'm not trying to compare, but I think where we're at right now is we're at a moment in SoFi like Palantir was in 2022. It just hit EBITDA positive. It's not so much EPS positive as of right now, but I think the EPS growth is going to be so massive over the next 2 to 3 years that people are going to be kicking themselves. I think it's only like an $8 billion company. It's something kind of silly, but I see where Chris and many others are right now, where saying it's just a bank. It's just a bank. I get that. But at the same time, when you're generating, there's line of sight to this thing within several years to get to $1 EPS. And if that's the case, then, at that time, if it's $1 EPS, it should be trading at, $15, right? As a bank, $12 to $15. So I see a pathway where it can get to that $1 EPS. So, am I the most knowledgeable about SoFi? Absolutely not. But at the same time, a lot of the risk is removed.
And
so
you like
less EBITDA
Noto.
starts. What's that?
And you like Noto.
I don't know enough about it, to be honest. Like you said, it was kind of like somebody pressured me. It was 20 grand, which that's going to sound like a douchey thing to say, but it wasn't that big of a position. I see the potential in it. I know enough where I'm like, I know it's growing. It's EBITDA positive. It'll continue to be EBITDA positive. If it starts going the other way, I'm out, right? Like if it starts shrinking and you have anemic growth, then I'm out. But I just see it as a low risk place to put money. It was either that or I put 20 grand in the S&P 500 and I already have, 500 shares of SPY. So, why have more if you can find something that might potentially outpace the SPY?
Right.
So,
okay. First, Gerard, and Eddie. Thank you for becoming channel members. Really appreciate that. So thank you for becoming channel members. Daniel with the $5 super chat. Great show and guest, but your shirt is boring. This is for your flower shirt fund. I have to get another set of good shirts. I give one good shirt to the audience, and now a pink shirt. I thought no one has said anything that this was pink. I thought people would say I'm gay, but no one said that today.
Why only 10 years? That's a good question. So the older I get, the more I just want to be in the S&P 500 and less focus, right? And so this is some funny comments. Eventually I plan on what's that?
There's a bird flu epidemic. What's going on?
What's going on with this?
Got coronavirus 2.0? What's happening?
I was actually thinking about the bird flu the other day. I had bird flu my freshman year of college, which was like 12 years ago or something like that.
Dude, there's like 50 articles on Google about bird flu.
Oh no.
Oh boy.
Is this the point where we go to zero, map money to zero again?
Oh my god.
But no, eventually I plan on kind of, how do I say this? Getting more into the S&P. I eventually, like Chris, want to do money management for some folks. And I'm not going to do like crazy, like try to outpace the market by 700%, right? I'm going to be, really just trying to help people save more money because I think that's a huge part of it. I think a lot of people in this chat, probably included, don't invest enough money. Point blank.
I agree with you.
That's really where I'm going after. I'm just trying to help people. I'm not trying to reinvent the wheel. I think if you could get most people to invest in the S&P 500 and invest a significant portion of what they should be investing into the S&P 500, they'll be way better off. But I think, unfortunately, most people under invest. They're hoping for some moonshot that's going to return 500%, and that's going to be the balance of their shortfall of capital contributions. And I just don't think that that's the way to do it. Yeah, what's going on? Oh, let's.
All
yeah,
right. You want to watch this with me? So Palantir just put out a new, I guess it's an interview podcast thing where Chad, who was on my channel literally yesterday, so shout out to Chad. He sat down with the CIO Jim Siders to discuss how Palantir implements Palantir in their own business, which a lot of people ask, like, does Palantir even use their own software? And so this is a 12-minute production on what they do, and it came out today. So we'll play this today. We're not going to have Palantir Weekly tonight, guys. So this is basically our version of Palantir Weekly, and we'll watch this together.
I'm Chad Walquist. I'm an architect here at Palantir. One of the questions I get the most is, does Palantir actually use our own software to run our business? We tell you all these great things you can do with it. How do we use it? So I thought I'd go to the source of the truth here. We've got Jim Siders here, our CIO from Palantir. Thanks for joining me today.
Thanks for having me.
This is awesome. So maybe you've been here quite a while. Maybe you could share a little background of what you've been doing.
Yeah,
I'm going to switch it real quick to the YouTube version because I think the audio is a little bit better there. So we'll go there.
Today.
Thanks for having me.
This is awesome. So maybe you've been here quite a while. Maybe you could share a little background of what you've been doing.
Yeah, I've been at Palantir since 2013, February 2013. I joined as a temp contractor in the IT support help desk. In 2015, I moved to Palo Alto, which was then our headquarters, to be the first person in the company who spent all their time developing on Palantir internal tools for internal workflows at Palantir.
Wow. Well, I mean, I think that's where, a lot of mythology is like, oh, Palantir, they must have this crazy different system. But to start, we had an IT department just like everybody else. We had existing source system of records. We didn't have Foundry or anything. So we were just a normal IT shop building software, right? And so
Absolutely.
I think that's the interesting part about, kind of your story is we were like everybody else.
We are, in a lot of ways, we're both very like everybody else and very not. In 2014, 15, we were doing the same transformation that a lot of companies were at that time. We were becoming AWS first. We were becoming SaaS oriented across most of our systems of record in the enterprise. And now we're doing what a lot of other companies are doing also, which is realizing that that model doesn't scale terribly well. It doesn't lend itself terribly well to agility and affordability and the ability to iterate quickly over time. Fortunately now, Foundry is a thing when it wasn't then. All of the things that have become buzzwords in IT over the last few years, democratized delivery and optimizing value chains in different ways, and pushing things to the edge of the organization, Foundry is built for that. It's honestly the best thing we could have used. And I can only use the best things I can use. I don't get a freebie for using Foundry. It's just the best thing. And I need it.
And I mean, that comes back to, I get a lot of questions of like, wow, this can do so much. When should I use it? When should I not use it? Well, I already have this data warehouse tool and I already have this ERP. And I think that's the interesting story too, is, let's use the systems in the right way. This is their design. So if I've got a good ERP, okay, let's not reinvent the wheel. Let's use that and use Foundry to build that customization because we can move quickly. I think maybe a little bit on, the story you have around how we pick when we use Foundry or not, or even around how, the right way to use it, I think is a big thing we get a lot of questions on, right?
The right way for us, you gave me a great segue there. There's going to be systems that just still exist, right? Like if a giant company has spent many years trying to figure out how to be an excellent ERP in terms of really trustworthy general ledger transactions, I don't want to reinvent the wheel there, right? Auditors already understand how to deal with that. Investors already understand how to deal with that. But our company isn't shaped to engage with a tool like that the way that tool wants us to, if that tool even has an opinion at all. And we need to run the business in a way that's relevant for our business. So that's where the ontology comes in. It's like the definition of shaped the way our business is. It's objects that are semantically linked to how we actually do things. So instead of trying to use our ERP's expense tracking methodology, a group internally spun up a tool called Rocket, which is a suite of tools and dashboards that let our business manage expense in a way that's relevant for our business. And it's fueled record-setting excellent expense management over the last few years. It's really contributed to our bottom line.
I think maybe a little bit on your decision-making process about how and when and where to use the tools.
Yeah, we sort of joke internally, we're a and company, not an or company. That like fast, cheap, secure, you can only pick two is out the window. For us, the business I support won't accept it. So we need a situation where you have data layer that aligns with good governance and good compliance, that is compatible with people at the edge of the organization being empowered to solve their own problems in a world where the easiest thing has to be the right thing from a compliance or security perspective. And then you set people free on objects that really semantically accurately represent how you run your business. Let them solve their own problems instead of placing orders at the IT snack bar.
Yeah, I think you hit a good point on that, generating value over time. I think it's the flywheel effect I hear about all the time.
Yep.
Is, okay, I build these semantic objects. I have the people component. I have this solo component. That then allows you to build the next use case, the next use. So there's kind of that compounding value. Have you seen that as you're deploying this?
Tons, all the time, actually. One of the things that I love about using Foundry as a process orchestration or ticketing system is that it encourages the dissolution of silos in an org rather than the strengthening of them. You have a lot of name your trouble ticketing or process automation suite. It tends to keep whatever optimization is created within the part of the org that created it. And obviously everybody will sell you a bolt-on thing to turn that into a shareable something. It goes to your integration layer. The only right way to use Foundry is doing that by default. So for example, the recruiting organization and people ops felt that it was really wasteful and time consuming, the process between when a hiring manager says yes to hiring a candidate and the time that person starts at the company. There's too many people, too many workflows, too many processes involved. So they encoded that in a Foundry layer to orchestrate those processes. A lot of the primitives that they had to come up with in the course of that work were noticed by the folks who run the offboarding process. When somebody decides to leave the company, there's a whole other set of workflows. They didn't want to stand in line and wait for developers to build that stuff for them. So those folks in the people ops organization built their own tool, kind of without really anybody even knowing, and then brought it to me, to the security organization, to internal audit, and said, can we use this in production? And it's production ready. It was production quality right out of the gate because they knew the problem space better than anybody else.
Yeah, that's fascinating. So I think that comes back to the value creation component now. Okay, you're talking about these builders. Maybe we could hit on the point of, I'm changing the outcomes for people that are building this platform because they're now focused, instead of on an IT stack, they're focused on value delivery for the business.
Yes.
How is that?
This was the big thing as well in Chad's tweet yesterday that kind of went viral. It was how do you get these Fortune 500 C-suites to think of value versus just another pain in the ass piece of software to implement in the business? And if you deliver the value, there's a better chance you actually get the deal.
That transition, and how are they doing it? Have we added headcount to do this? What are we doing in that transition from a change management?
Any person who runs an IT org is going to put up their hand and say they want to increase their headcount, I think. But no, actually, we haven't. The key for us was AIP.
Yeah.
It lets people with existing expertise be functional in a platform that they're just learning. And it forces them in a way to think about the fundamentals of what they're trying to do there, which aligns you with value by default, right? You can't be thinking about the constructs that exist in whatever this proprietary system is. You have to be asking AIP Assist or whatever the thing is you're addressing, how do I get this thing done? I want to accomplish this outcome. Here's how I would accomplish it in the platform I understand. How would I accomplish it here?
Yeah, and I guess what's the take from these employees as they're learning these new tool sets? I know some people from a change management standpoint, hey, this is my baby, this is my tool. I built my 20-year career on being this expert for this.
Totally.
How have they adopted? Because I think that's a lot of fear from an IT manager standpoint. Is I love this tool, I love the direction, but now how do I get people to add value?
I had a lot of trepidation about that. When we first kicked off trying to start this flywheel spinning, it's how is somebody who works on MuleSoft all day going to respond to me asking them to think about Foundry instead? And honestly, in almost every case, people embraced it because they tend to know the systems that they've specialized in really, really well. That makes them really familiar with the shortcomings of those systems too, or the frustration with the pace of development at the manufacturer or whatever, right? Everybody knows that the support desk at whatever their platform company is terrible. They don't want to get in line there. What if they could just do that themselves? That would be insane.
Yeah.
Nobody went into these careers wanting to sit in line at some support desk. They wanted to help the business. They were passionate about something about the problem space or the solutions.
Yeah.
It set them all free. And honestly, the bigger challenge has been for me trying to gate things from rushing to production, making sure that we were checking all the boxes for internal audit, and finance and security and legal, because all of the actual engineers in IT and in all the other internal teams are just like drunk on the Kool-Aid. They just like want to go do the thing, and they're finally getting to go do the thing. One of our finance tooling engineers came up with a way to reduce cycle time on expense allocations as part of our monthly, like closing the books every month-end close, to reduce the cycle time on that from about 12 hours to something like 5 to 7 minutes.
Wow.
And the worst pressure that I've gotten from anything in the last year of my life at Palantir has been people demanding that we put that in production faster. Like, how do we get it through audit faster?
When we're talking about this, it's making me think, because we're transforming our internal teams to builders, which comes with build with AIP,
Absolutely.
AIP now. And so just like we are taking our way of operating and coding the product now, also with AIP now and build with AIP, we are taking that same build mentality that we're seeing internally and then giving that to our customers. So
Absolutely.
now we've got build camps. So now that we're going to have people in there building with us, people can sign up for their own accounts and log in, which is that whole builder mentality, which I think is what we're seeing the magic here is how let's bring that magic to everybody, right?
Absolutely. Our internal teams, as those other new efforts launched, were coming to me on a daily basis going, how do we get this idea of ours in the marketplace to make sure that people all over the place can get it? It's like, that's a really cool dynamic where people connect with the upside of the business in a way that normally in our teams, it doesn't happen.
So this is exciting. I love all the journey, how kind of we got to where we are and what we're doing. What's next? What do you see on the horizon?
It feels like the flywheel's really just spinning now. I think this is the beginning. We're just now at the beginning of a multi-year project to deprecate one of the industry leading ticketing and knowledge management systems in favor of internally sourced Foundry. We're in the process of deprecating our middleware layer between our ERPs to replace it with orchestrating all of those transactions with Foundry. We're in the process of moving away from the industry leading SIM source solution in favor of Foundry. We have AI agents that are doing ticket routing across all of our ticketing work streams, across all of our recruiting work streams, and we're just getting started.
Thanks for joining me today. I really enjoyed the conversation. Just a couple IT guys talking shop here in Arkansas. I loved it. So again, thanks for traveling and joining me here.
Absolutely. Thanks for having me. We all joined Palantir because we love the company, love the mission. It's just I'm fired up to get the word out. So thanks for the opportunity.
That was pretty cool, man. That was not bad at all. Couple thoughts I have on that, and then I'll get your thoughts, Matt. I think the core thing that they talked about is this idea of empowering external companies with the same logic that they are starting to build within the foundation of Palantir, which is builders. And if you can actually empower builders in a meaningful way, and then take that feeling that they get, which is creating value, because when a builder creates value, they want to keep building, and bring that to another organization, that is contagious throughout an enterprise. And that's where you get something like Tampa General that just can't let go of that builder type of architecture, or like a UDoc that can't let go of that. Your thoughts on that interview?
I can't iterate enough why Palantir is so valuable. And it's literally a lot of what they talked about, right? It's making sure your data comes in and streams into your organization in a coherent manner, that you can put relationships to all your data, no matter how many applications you build, work off the same data. It's not a disparate data set, and I think that it's different now. The digital transformation that I experienced 10 years ago joining the workforce at UDoc was, let's hire this consultant firm and they'll build us a little application. And, that's all it was. And, 3 years down the road, you have a couple people move on from the role and it's useless again, right? It dies. The beauty of what Foundry does is that it gives you a backbone to build all these applications off of, that's constantly, pulling in the data in an articulate in a language that everybody across the globe can use, versus say some sort of consultant that puts it in their language. And so you've now demonstrated and shown a company language that everybody has the same data set that they can use. It takes a while to, and maybe it's faster now, but making sure that everything was lined up appropriately. Everything was kind of using the same sort of formulas or same sort of nomenclature. So that way anybody could be like, for example, if I want to look at a well in the North Sea or Indonesia or whatever, I could literally have an idea as to how to look that up, like Google,
Right.
and find the data that I need so I can stream it appropriately. And I don't need to be some sort of rocket scientist to do that, right? I just have to know the nomenclature and how we actually use that within Foundry, within our system. And so then you can start building things, like you said, builders, anybody that's intelligent knows how to build things and applications. You can build customizable applications for whatever you want on top of that data set. And it's the right data, it's streams, it's going to always be updating. And if it, you can pivot table it using Fusion and have, or not Fusion, Contour, and have whatever the hell you want in the succinct manner that you want, so you can operate off of it. Well, it is Fusion and Contour. They work together, and really allows you to really get the data in the way that you need it to be able to work appropriately. And so it just continues to eat, and it's so different. It continues to eat. When everyone talks about digitalization, that means they hire a bunch of consultants, they give all these different tools into the company. But Palantir and the Foundry platform for us at UDoc continues to cannibalize all those old platforms,
which is the bull case, which is why I think the street's like, all right, $28, but
exactly,
we'll give them the time to grow into that. Because
I apologize, I'm not like a software guy that knows more about it, right? There's so many people I could introduce you to that know way more about it than I do. And he asked me a couple months ago, and I don't know how I should check in on him, how he's doing, because he just left UDoc not so long ago to focus on building Palantir tools, and I'm curious to see how he's doing. But maybe eventually we can get him on. But yeah, it's a different level, right? And that's the thing, is it's like, I think when you think about a Snowflake, when you think about a Databricks, I don't think the applications talk to each other as well as, say, a Palantir Foundry does. And I would love for Snowflake, or I would love for Databricks to build something like an AIP and share.
They might. Maybe they will,
it all makes sense to me. When I saw the AIP logistics demo, I don't know when it was, August or September last year, as a month or two after it was announced, and I saw it, I followed it and made sense. Like, while I was reading it, I was like, okay, like that makes sense, right? It's literally just like building into or tapping into all the applications that you already know and how to use, and it's removing that sort of like clicking aspect of things, and it makes things so simple. I don't know, with the amount of applications that Snow and Databricks use, and that like people continue to put in there, that don't necessarily, like, they might be good applications, but they don't necessarily have the connectability as, say, like a Foundry application does. I think there's a reason why there's only 40 or 50 custom applications, or sorry, like off the shelf applications that Palantir uses. And I think it's because of that reason, right? Because it's able to communicate so well with all your other applications, versus like a Snowflake and a Databricks. I don't think that their applications communicate nearly as well. I don't know, because I don't have that capability. And so I'll just throw my hands up and say, I don't know. But I would love to have that conversation with like CodeStrap or somebody else that has that knowledge and truly understand the inner workings of all these people. Like, oh, there's so many applications. It's like, there's a lot of applications for your iPhone. Doesn't mean you need all of them and that all of them are good.
Yeah.
So
that's a good point. All right. So not bad stuff. You guys can check out that interview as well on their YouTube channel to rewatch it. You want to end off with some Cameron Dawson here? Let's see what she has to say about why this market can continue to rally.
What do you make of the market reaction this week?
There is enough of a short offsides position in those unloved areas of the market that just on positioning normalization alone, this rally can continue. Look at futures positioning in something like the Russell 2000. It's at its lowest levels since 2022, which just says a lot of people are offside. So if you continue to see this fading in yields, this fading in inflation, and growth holding up, all of those things being very important for that to continue. But if those things do continue, this can continue to be a rip-roaring rally.
So UBS today says historically when the market experiences a significant one-day rotation from large to small caps, the trend tends to continue for the following 4 weeks. So we can expect this kind of activity, you think, for a month or so?
It happened at the end of 2023. We saw a 20% rally in small caps on a 100 basis point decline in the 10-year Treasury. Positioning was offsides then again as well. The question is, after you get that 4 weeks or a couple of months, what happens after that? Because the start of 2024 was terrible for small caps. You saw them give up all of that relative performance, but that's what we'll judge once we see positioning really start to reorient itself. And we think it comes down to earnings. Earnings have to play ball for the small caps and for value for this to last more than 4 weeks.
Okay, so let's get off of small caps, but go to value and other places that just haven't performed as well. Week to date winners. Real estate up 4.5%, utilities up near 4%, industrials up almost 3%, materials the same amount. So these, what have been unloved areas of the market, I mean, utilities had that AI related moment, you know what I mean? But is it time to really seriously look at those areas? Forget about the small caps for a moment.
Yeah, I think that they have a place in portfolios because there's places where there simply isn't as much stretched valuations. And what we see is that when markets do eventually correct, you have this dynamic where the bigger they are, the harder they fall, meaning that very stretched valuations become a risk and an unwind. We don't think we're going to have one of those soon, but picking up names that trade at reasonable valuations makes a lot of sense. But we would emphasize that you have to stay quality. It's not about dumpster diving. It's not about value traps, but quality names that have just been left behind this year.
Does that mean when you say quality names, are we talking large caps? Is this just like, no?
No, it doesn't have to be large caps. There are quality names throughout the size spectrum. We define it as things that have strong balance sheets, strong free cash flow, really good earnings stability. Right now, it isn't everything rally. So junk is going to do better. Junk is your beta. It goes up a lot more. But in the event we do see that reversal, by sticking with quality, you protect yourself on the eventual downside.
Is this a rate cut rally? That's how we framed it the other day with the chair was on the hill and made what some have termed another pivot, a pivot even closer to rate cuts, and sort of left the belief to the market that they're definitely coming. The way that the data is shaping up, barring some major surprise, expect cuts and reasonably soon.
And it's cuts without a concomitant decrease in growth, meaning that you're getting the cuts without necessarily having growth fall off a cliff. And that, yes, there's fraying in the labor market, but it's not as if you're seeing mass job losses. There is still labor hoarding going on, which means consumers are still able to spend, even if some of them are just keeping their head above water. So if you get the cuts and you're not getting huge cuts to growth forecasts, that's why the market is up. Now, we are watching, though. Economic surprises are deeply negative, and you are seeing trims to GDP forecasts. So that is a wild card.
I agree with a lot of what she's saying, which is that rally can continue, even if we get the cut. But her core thesis, which I think everyone's thesis here, is like it's got to be quality. As she says, you can't go dumpster diving just for like whatever names you think look cheap if there's a rally. And also the point she makes about the labor market, I think that's very important. We've been talking about that so much on the market open. Like labor is getting tight, but it's not massive. There's still 8 million jobs open, 7.94. So money's out there and jobs are out there. Consumers have the ability to spend, like you with your Airbnb business, always booked because people are traveling, right?
Yeah, I'm fortunate. Trying to be like you. High flyer.
I'm trying to get like you. Dude.
When hypothetical question. If I were to move to Jersey, where am I moving to?
Jersey?
Yeah.
For a
I'm
guy
trying to be
like
rich like Amit.
Well, you are a bachelor, early 30s, Jersey. I would say Hoboken.
Oh.
And you have a decent sized net worth. So Hoboken or Jersey City, because there's other parts in South Jersey, but those are like suburbs. And I feel like you might want to be in the city. That's like more fun, but it's not as expensive as New York. So
how far is it from Hoboken to like South Jersey if I need to go check on the props?
It's a while. Like you're talking about your South Jersey, like what, near the ocean, Atlantic City?
Yeah.
Yeah, it's like 3-4 hours, dude. It's like
shit.
But South Jersey's boring. That's the problem. South Jersey's like it's like a
yeah. It's great. It's great during the summer, but you're right. I mean, during the off season. So
yeah.
Mm.
All right. Well, this was fun, Matt. Thank you for joining. Are you doing anything over the weekend? Or you're kind of
good question. I'm due to Rocket Lab Weekly tomorrow.
how many side chicks are you inviting over? Now that I've relieved you of your Palantir weekly duties, you actually have time to.
I'm a church going man.
Dude, you're not gonna act like there was this one episode where you were 40 minutes late, and you're like, "What?" And then he tells like, "Sorry guys, I had to handle some business." So,
business doesn't necessarily mean women.
I mean, dude, the business had a name on it, so it was definitely not a guy. That's all I'll say. But no, that's it's been fun, dude.
I'm Amish. Yeah, I agree. Shampastiness.
I don't think I've ever met someone who's Amish, bro. I don't think I've ever
gotta
met
take it. It's a good time. It's a different world.
All right. Cool. So this was fun. Yeah, no Palantir Weekly this week, but we'll be back next week. And then we got earnings in 3 weeks, dude. So it's gonna come by pretty quick.
It's gonna be fun. Hopefully we maintain. If it stays at 28, I'm happy with 28. Not trying to. I mean, if it goes to 1 million, that'd be great. But at the same time, I have some covered calls that I'd rather not lose. So
that would be a little crazy. $1 million a share at 2 billion shares. Could you imagine, dude? We'd be the best investors of all time. We bought the shit at $7.
Yeah.
All right.
Anyway,
thank you, Matt. Appreciate it. Matt's
You're
Twitter.
the man. Thanks for having me on.
Yeah, I'll put in the chat. See you later, Matt.
I'll let you close up.
All right. Bye-bye. Okay, cool. Thomas says, does Matt know you're gay? You guys actually think I'm gay, dude. I'm surprised no one made the joke with the pink shirt. I really was surprised no one made the joke. I was like, oh, this will be easy bait for everybody. No one took the bait, which was surprising. Here's Matt's Twitter, by the way. You guys can follow him there. Okay, so I think that's pretty much it for me. There's not any other headlines or things like that. Let me just take one look. We talked about Bitcoin in Germany being Germany. Elon still hasn't responded to anything about this Bloomberg stuff. He did. Apparently there was like the Europe asked him to like censor some stuff on Twitter and he said no. So he's going back and forth with like the European Commission about censorship on Twitter. Like that's what he's arguing about, but nothing about this Bloomberg data and this robotaxi delay. But it feels like everyone thinks there's going to be a delay. And so I guess we're going to see what happens there. There was one tweet that I thought was really interesting here. So Elizabeth Warren tweeted about inflation by the greedy corporations. And so she said right here, when you stroll down the grocery aisle, nearly everything you see is made by a handful of big corporations. During the pandemic, those companies jacked up prices, but because of the lack of competition, they've continued to keep them high, and it's hurting everyday Americans. So she's blaming corporations for keeping the price gouging high for inflation. Sarah Eisen, CNBC anchor, actually said, Pepsi CEO told me today that chips and snacks made by Frito-Lay are 35% more expensive than 2019 levels, but input costs rose 45% over that period. Also, operating margins are flat over time. And I thought that was a really interesting dynamic between business and politicians, where the politicians to their constituents are like, hey, it's Pepsi's fault that the chips are so expensive. And Pepsi's like, well, our raw costs are up and our margins are flat, which means we haven't made that much more money off the chips, even if they're a little bit more expensive. We've actually lost money in many instances because our input costs are higher. So nice little back and forth there, I thought, from a business and politician perspective. And the question is, does someone like Warren acknowledge this harsh reality that Pepsi CEO is talking about when it comes to inflation? And if they don't, that's where they just don't care about listening. But if they do, maybe there is a compromise there between both angles. Is Biden going to resign already? I am very curious about the same question, dude. Everyone today. Now there's a New York Times article that's saying Jill Biden is mad at Obama because apparently Obama was the one who told George Clooney to write the op-ed because Obama couldn't write the op-ed because like Obama's his like best friend or whatever. So George Clooney wrote it at the advice of Obama, and now Jill Biden is like mad at Obama for telling this. Like it's just insane, but that's how it's playing out. And if I had to bet right now, I don't think it's Biden versus, I think it's Harris versus Trump. I think that's how it plays I think that's what we get in September. But as of now, Biden's not leaving. Obama said he was indifferent. No, I think Obama wants Biden to drop out, dude. I think Obama wants him to get out. I think he's annoyed by this whole situation too. But Biden's got a really strong team, aka Jill and Hunter, that want him to stay, and I don't think he's leaving anytime soon. TSM or Nvidia, I would, dude. I feel like TSM's the better bet because it's worth $2 trillion less, and their growth is not triple-digit growth like Nvidia, but it's not like it's low single digits. So I would pick TSM, but I don't think you could go wrong with both. But if we see a rotation, then both of them will get a haircut. You know what I was thinking of buying today? Actually, I was thinking of buying one share of Broadcom. I was thinking of literally buying one share of Broadcom. They're about to do a split. But I feel like next week, if we have some weakness, we can get this thing at like 1,500 and then buy one share or maybe even two shares. Because going into that split and August CPI, I think they have a little bit of room to run. It's up 50% this year. So if it falls back into like the 1650-ish, I think that's where it's like a decent entry point. It's run up a lot. And even today it was down, but it wasn't down enough. But Broadcom will be doing a split. And so hopefully that 10-for-1 split will kind of have a bit of a catalyst the way Nvidia had after their split as well. Carp for president, the Palantirian party. Dude, people's like, if I was president, I would be I would just give every contract to Palantir. They would be like, sir, we need to assess the food budget. I was like, I'll just give it to Palantir. Let them figure it out. Sir, the nuclear cost, like, give it to Palantir. Sir, the healthcare, just give it to Palantir. Like, I would just be like, dude, I would just have Carp's personal phone number. Like, how many contracts do you want tomorrow? Oh, you need 5 billion? All right, we'll give you 5. Like, it would be the coolest presidency ever if you had Palantir stock, dude. It'd literally be the coolest thing ever. It would be fun. But I don't want to be president because that's too much responsibility, and it's not enough fun as doing business, and you have to work too hard to like even get things passed. That's the thing about a democracy, right? It's like people have to agree on. I mean, this whole Immigration Act, this SAVE Act that the House passed but Biden vetoed, which is requiring identification to vote. Democrats and Republicans to an extent agreed on it, but then Biden had the executive decision to be like, no, we're not going to do this. And so it's really hard to get shit passed and to like actually make change as a politician. You would have to get a haircut. I would just wear a hat every day. I would kill it in the press conferences though, dude. I would fucking, if I mean, a lot of the job is public speaking, so I feel like I wouldn't be horrible, but I think I would smash every press conference, dude. Like, it would just be the most fun press conferences every single day. Here are the top holdings as of yesterday in the S&P. I thought this graphic was interesting. 87 million shares of Microsoft, 169 of Apple, 289 million of Nvidia, 107 of Amazon, 25 million of Meta, about 110 of Google. Eli Lilly with 9.3 million. Broadcom, which seems like it's the Mag 8 now, 5 million shares. And then Berkshire Hathaway, 21 million shares. So that's the weighting percentage. Apple basically up there with Microsoft. Tesla's out of the top 10. It was in there for a little bit, I think, a couple years ago, but now it's out. So these companies on earnings, they just really need to perform or else we're taking a little bit of dip. But if they don't, then we go higher. Dude, if I was the comms director for Biden, if I was the communications guy on Biden, I think I would at least, first of all, he wouldn't have done as bad as did in the debate. I would have prepped him up in a totally different way. I would have been like, we're going to go this angle. Now, granted, I don't know. I can't control his health, but we definitely would have had a better strategy. That would be fun. It would be fun to control communications for someone who's like super important in the world. Because communications is really just a game of like, how do you want to convey a message? But the PR version of communications can get kind of boring because then you're just like going through the corporate route of like interviews and stuff, and like going direct to consumers, like where, I mean, you're seeing it with Palantir, right? And all the content they're putting out and inviting me to like AIPCon, like they're realizing like this corporate shit is like, no one gives a fuck, dude. Like no one cares if you're like, if Carp's on CNBC, we care. But if that guy that Chad was interviewing was on CNBC, even if he's a Palantir employee, no one would care. Just no one cares. Like you need to go through the avenues where people actually give a fuck to get distribution. And if you can't, then it's going to be hard to win. Amit, are you buying Rocket Lab? Not really. I still have the small position I had, but I'm just, again, I like Rocket Lab. It's super cool. I'm just not like super excited to develop a massive position. But I think Matt's arguments are probably correct on this. The thing about Rocket Lab is, though, it is a long-term hold, because as bullish as he is, he knows that like if they fail one launch, it comes back down 30-40%. So I like it. I think his thesis makes a lot of sense. We did a full podcast on it a couple weeks ago, and so you can watch that on the channel. Just type in Amit Rocket Lab I type in Rocket Lab trillion. I said it either goes to a trillion or goes to zero. And you can hear his thoughts more in depth, but he liked it. So it would be good. Amit would pick Chad for VP. Dude, that'd be so fun. I wonder who do you think is going to be the VP for Trump? I like everyone's saying Vivek, but I don't think it's Vivek. I think he's going to go with either JD Vance, which is still a little bit of a dark horse candidate, or he's going to go with someone a little bit more corporate than JD Vance, because JD Vance is a little bit more free spirited. Same with Vivek. Like, he's not going to be able to control Vivek or JD as much as he would want to. And I think that's something Trump doesn't like. He wants to be able to, like, make you into the character he wants to make you, which theoretically every president wants to do that to their VP. But Vivek has a mouth and he'll talk. And so I don't know. I don't know if he actually feels comfortable going with Vivek. Rubio. I don't think Rubio would be horrible. I think Rubio's a little too corporate, though. I don't think people would like a Rubio Trump ticket. Biden is Trump's VP. Dude, when Biden called Trump the VP, or he called Harris Trump, I mean, dude, that shit was wild, bro. I was watching the debate or the press conference in real time, and he said that, and I was just like, what? Like, did he actually just say that? And that was on the first question, dude. That was the tough part. It was the first question. This was the weirdest part. Okay, so let me show you the weirdest part of the press conference. So a reporter says, hey, you referred to Kamala Harris as VP Trump. Right now, Trump is using that to mock you. Trump basically like clipped that and he put it on his social media. How do you combat that criticism from tonight? This is what Biden said. This is the part I was like, what did he just say? I'm so confused what he said.
Respectfully, earlier you misspoke in your opening answer. You referred to Vice President Harris as Vice President Trump. Right now, Donald Trump is using that to mock your age and your memory. How do you combat that criticism from tonight?
Listen to him.
This concludes tonight's.
Dude, I was like, what? What does listen to him mean? I think what he was trying to say is like, listen to how crazy Trump is. So like, don't just judge me, listen to him. But like the way he said it made no sense. Like, or it just didn't feel like it was the thing that he was trying to get at. He was like, listen to him. It's like, what do you mean? Listen to, like, what are you talking about? Like, it was weird. It was very weird. Or listen to him. He is right. Yeah, that's the worst part. Listen to him. He's right about him making fun of me. Like, it made no sense, bro. Shout out to Carlos. We got Carlos in the chat. Carlos is going to have a big announcement coming up soon that I know about and you guys don't know about. But Carlos will be announcing that pretty soon. I think you guys are going to enjoy Carlos's announcement. I think you guys will enjoy it. So Carlos will have an announcement probably in like 2 weeks, maybe less. But it'll be fun. You guys will enjoy it. Yeah, President of Ukraine, Putin, calling him Putin, dude. And you saw Zelensky's face. He was just like, what? He's like, did you just say that? And he was like, no, I didn't mean to say that. I meant we're gonna beat Putin. It was just, it was tough. This was the line where he mentioned Kamala yesterday as Trump.
Look, I wouldn't have picked Vice President Trump to be vice president, but I think she was not qualified to be president. So let's start there.
Like, I'm watching this, and this is like 2 seconds into the question, the Q&A, and I'm like, damn, that one's about to go viral. And it ended up going pretty viral. The golf joke about Trump that Biden launched in the presser yesterday was classic. Yes, that one was funny. The fact that they were arguing about golf as well during the debate too, I was just like, dude, this is ridiculous. This is actually insane. Okay, for the people that are not from America who are in the audience, the Europeans or the people just from Asia, wherever you guys are, how do you guys think about Trump versus Biden? How do you guys conceptualize looking at America and seeing these are the candidates that are running for the president of the United States? Because I would imagine if I was from like Italy or France or something and I didn't understand American politics, but I saw those two as the guys that America picked to represent America going at it, I would just be like, what the fuck is going on in America? Like, it's like you guys are supposed to be like the best country in the world and shit. And you're just like, this is what you do. Like my family in India, they make fun of, like in our WhatsApp groups, they make fun of Trump and Biden so much. They're just like, how are you guys like the most esteemed country in the world? And this is what you guys are doing for the leader of the free world. It's pretty insane. Fact that they were arguing about golf is stupid. I'm from Trinidad and Tobago. Yeah, I would agree. Nick just put the popcorn emoji. I'm from Jamaica and we laugh so hard. At least it's funny, dude. It's like comedy. Crowd control says Biden is on the bussy buttered sausage level at this point. It's embarrassing. Thomas says it's sad to see those two as the candidates. You need more than two parties. Well, that's the other thing. There's like a lot more parties in other parts of the world. Whereas in America, it's just two, and that's it. Like any other party that tries to start just gets, I mean, they just don't get enough votes to like have any meaningful say. Canadian here, I think that the rest of the world is terrified that Trump gets back in. You know, the thing about 2016, I remember when I was in college and Trump got elected, a lot of us in 2016 were worried that, like, forget Republican or Democrat, he was just such a different candidate as I was watching his candidacy unfold. And I was also nervous, like, yo, this guy has the nuclear codes. Like, this is kind of scary. Like, what if he just, like, says some crazy shit one day? Because the way he was acting on his campaign was not a traditional campaign. But then he got into office, and although, like, every day you'd wake up to a new tweet and the world would go crazy, like, about his tweet, it wasn't like the world ended, you know? And I think that's the thing Americans had to come to grips with, which is why I think he has so much support, because a decent amount of Americans were like, okay, so the world didn't end. It's not like he got into World War III. He didn't, like, launch nukes, but he was a bit off-hinged. And so the question is, did we, like, enjoy the off-hingedness a bit? Do we, like, laugh at it and we kind of just, like, went on with our day? Or did it genuinely, like, make us panic? And after a couple of years, I think, quite honestly, people just enjoyed it. They just laughed at it. Like, the amount of media that Trump got of making fun of, like, the dumb shit he would say, that wasn't catastrophic, but it was like he called, you know, the North Korean guy Rocket Man. He, like, would just say stupid shit. Like, it ended up just being funny. And I think that's why some people don't feel the same, like, oh, he's in charge of the nuclear codes now, because, like, well, the world didn't end when he was president. And in fact, we had our taxes cut and all this stuff. Granted, it'll be a new presidency with a whole host of new challenges, you know, Ukraine and Russia still going on. So I don't know how 4 years of Trump in 2024 would actually play out. Dude, when he said we inject bleach, do you guys remember when Trump called it a China virus because it's from China? Dude, when he said that shit, I remember me and my mom, me and my mom got COVID back in March. Like, we were two of the first people. You guys don't actually know this, but my mom went to the hospital when she had COVID. She was there for 5 days. She was on a ventilator. I don't think I ever told you guys that. My mom was on a ventilator for 5 days when she had COVID. It was really bad, but she ended up being okay. I had COVID because I hosted a big ass party on March 12th of 2020 at my house, and it was fun. Great night. Had a lot of fun. Woke up the next morning, didn't feel the best, didn't think much of it. I thought COVID was a passing fad. 2 days later, I'm like, oh shit, I'm sick. And that's when there was no vaccine, so my mom was freaking out. I was okay, but then I gave COVID to my sister and my mom, and then my mom actually really got it bad, but she was okay. But we both had COVID, and we were watching Trump do this press conference. And when he said this shit, we both had COVID, but we were both dying at this moment because this was just hilarious the way this played out.
You keep calling this the Chinese virus. There are reports of dozens of incidents of bias against Chinese Americans in this country. Your own aide, Secretary Azar, says he does not use this term. He says ethnicity does not cause the virus. Why do you keep using this? A lot of people say it's racist.
It's not racist at all. No, not at all. It comes from China. That's why. It comes from China. I want to be accurate. Yeah, please, John. Yeah.
Dude, like, I never called it the China virus. I called it COVID. I did it. I didn't want to offend anybody. But when the raw sort of like rash tone of Trump is what I think a lot of Americans are, for the people in the chat that are not from America. I think if you're wondering why are Americans attracted to this guy, or at least half the country that wants to vote for him, it's because he makes things so simple it's a Chinese virus because it's from China. Whereas every other president in the history of presidents would be like, well, we can't say that because that's going to, Xi Jinping's going to be offended and Chinese people will be offended and Asians, it'll be sound racist, all this stuff. And those are valid concerns, but Trump just doesn't give a fuck. And I think there's something about half of America that likes that I don't give a fuck energy and thinks that the political correctness of being censored for like speaking your raw thoughts has gone too far. And what's the worst that happens if you call it a Chinese virus? Well, it sounds a little off-putting, but at the end of the day, you move on. And that's why I think a lot of Americans are tired of the current administration that feels like you have to like step on eggshells over everything you say because it could offend somebody. And Trump's did that not just about China, but about every country, the way he talks about anything. So that part was hilarious though. That video was just like, I remember my dad could not stop laughing. He was like, he's like, oh, it's a China virus. He's like, yeah, well, it's a Chinese virus. Like it's from China. But I think that's what America's attracted to when it comes to Trump. I think that's what they like about him more so than a candidate who's like super, super rigid, I guess. So I guess we'll see what happens. The one thing I will say about the media and Trump, though, I think the media is lying to everybody. And I take media, I mean, all the mainstream outlets. I think they want a Trump presidency badly, dude. Think about how they're milking this whole Biden needs to go narrative. Biden has dementia. Like I've been watching the news more than I have over the past couple of weeks just because I want to get coverage on how people are thinking about the Biden presidency. And I'm assuming other people are, so their ratings are going up. So they're milking this whole George Clooney wrote an op-ed for Biden to drop out. Like there's all this attention here. And that's because there's controversy with Biden. Well, this is the first like real controversy we've had in Biden for a couple of years. With Trump, there was controversy every single minute of every single day. And so the media just had so much attention, right? CNN actually got people to watch because they wanted to see what happens in terms of the reaction from commentators when Trump says, I could shoot someone on Fifth Ave and no one would notice or something, right? Like when you say these ridiculous things, you want to see what people have to say. So I think the media absolutely wants Trump to win. I think they want the ratings. And although they're acting like they don't want Trump to win because they have to fight this ideological narrative to like give to the consumers that are on their side of the fence, if he does win, they know they're going to bring those people in and even more eyeballs because people are going to be interested in their coverage. So it'll be really interesting to see how this plays out. But I definitely do think the media is excited for Trump. Media wants Trump is no secret. They need the ratings to survive. I really don't think many networks can survive off of Biden. Yeah, and there's a good French philosopher called Jean Baudrillard. Let me know if anyone has ever heard or read his work. But his work in the 1990s kind of describes what happened with Trump. And his argument is around a hyper real world, which is a philosophical term for like when things get so chaotic and absurd, they start to not make sense anymore. And they actually create the foundations for things to get even more absurd. It's like a really interesting argument. So his argument around media at the intersection of capitalism is like when the media has a narrative, they will put conflicting narratives against each other, use those narratives to manipulate the other narratives, and it'll engulf into an overarching narrative that is simply meant to create more consumption, i.e. capitalism, which can sell advertising dollars, et cetera, et cetera. And Trump was the perfect embodiment of that. Trump would say one thing today, the other thing tomorrow. He would conflict himself here. He would say he's not racist, but then he would say this China virus, which you could argue is not necessarily racist, but it would create a contradiction, a paradox within the original narrative. And then you have 17 different commentators talking about their assumptions around what he says. Then you have Trump starting a trade war in China. And there's all these different things he would do to create these abnormal paradoxes that would just be interesting for the media to keep covering, which would compound the money they essentially would make off the advertising for having all that attention. So Trump is the perfect example of what Baudrillard would call a hyper-real simulacra. That's kind of like the philosophical term. And I think the media wants him back. I definitely think the media will want him back. Davis says, please unbutton your shirt one more, please. That's you guys are funny here. I need to get more sunflower shirts because on Monday I wore it and the whole day was bright. Everyone liked the shirt. I got to get more. I have to get more. It seems like maybe that's why Dan Ives wears the shirts. He just realized like finance is boring, and if you add some color to it, it gets a little bit less boring. Do you think Biden would be capable last another 4 years? No. I am catching my breath every time he speaks in a conference because I'm afraid that he's going to say something that just doesn't make any sense. And yesterday we had like 4 of those gaffes. So he called Zelensky President Putin. Like, dude, when I saw that the first time, I could not believe my eyes. Let's actually watch the full clip of that. I just couldn't believe it. And then he caught himself quickly, but I felt like the damage had been done at that point. It was just bad. It just was not good. So here's the full moment when he did that.
Said before, Russia will not prevail in this war. Ukraine will prevail in this war, and we'll stand with them every single step of the way. That's what the compact says, loudly and clearly. And now I want to hand it over to the president of Ukraine, who has as much courage as he has determination. Ladies and gentlemen, President Putin. President Putin. We're going to beat President Putin. President Zelensky. I'm so focused on beating Putin, we got to worry about it. Anyway, Mr. President.
I'm better.
You are a hell of a lot better.
Thank you so much.
I don't know, man. That was just that was awkward, dude. It was so awkward. I saw that right after the market closed yesterday. I couldn't believe it, dude. I was just like, fuck, that's tough. That is tough to see. So we'll see. So yeah, I think over the next 4 years it's gonna be tough for him to keep it going. But he doesn't have to. If he wins, they can just give it to Kamala. But their concern is, can anyone actually beat Trump? And so we'll see. Just confirmed on the Robinhood live stream that the advanced web app is going to be shown off very soon. Yeah, so Robinhood started this new podcast. Obviously, I've been streaming, so I didn't have a chance to watch it. So thanks for that. No stress. But they just started like a weekly podcast talking about stocks and stuff. I had a feeling the advanced web app is going to be shown off very soon. I think on earnings, they're going to announce the new web app. They're going to put out the new UI. They're going to roll out the credit card. Oh, I didn't even tell you guys. So I had a meeting with someone yesterday who works in the credit card industry. I told you guys I was in meetings back to back the whole day, and we sat for an hour, and he walked me through. He works at a startup that builds the technology to deploy credit cards. So he's very familiar with interchange revenue, net interest revenue, how credit cards make money, lose money, etc. And so he walks me through a financial projection. We built out a financial model for Robinhood over the next 5 years. And the concern that a lot of people have about Robinhood losing money, giving you 3% cash back, based on the modeling we did yesterday, it's really not a concern. I mean, we played with very conservative assumptions. We took in the gold fee. We took in the interchange revenue split they would get from Coastal Community, which is the partner bank they work with. We also took in a very conservative underwriting process in terms of what if Coastal just doesn't give this card to a lot of people because they think, people can't afford to pay it back. And then we also assumed the bounty that a bank pays to the essentially white label brand, which is Robinhood creating this card, would be lower than what most banks pay to other white label brands. So like with all the assumptions we put in there, Robinhood's at least making 2.07, 2.08, call it 2.15%. And then they have 1% left that they can make up on the back end. A lot of people are thinking, oh, they're losing so much money on this thing and it's loss leader. It's like, yeah, it'll be a slight loss leader. And that's in year 1 and 2. By year 3, they're breaking even. By year 4, year 5, I mean, in our models, which again, Robinhood has probably done extensive models on their own, but it's looking like, close to $700-800 million in revenue just off this card. That's not net income, but that translates to a lot of users and a lot of users putting in a lot of money via deposits. So, you tweeted the clip? Okay, cool. Let me check that. So when we did, and that was, it made me a lot more comfortable about understanding the card because I was also kind of just not sure how they're making money on this. And we did very basic projections in our 1 hour meeting. I would imagine Robinhood has a team of 30 people that are like really looking at the math on how they can give this 3% back. And the only reason they can give the 3% back is because they're going to collect the rest in deposits. And they know that cash back that they give you comes back immediately, and that forces you or makes you want to put in even more money. And the interchange deal they likely have with Coastal Community is not a insignificant amount of interchange revenue. It's probably 85 to 90% of all the interchange revenue, because I like what he told me yesterday is banks don't make money on the interchange. They make money on the revolving balances that people have on the card. So the only way their credit card fails, and quite frankly, every credit card could fail like this, is if people don't hold a balance. But there's always going to be some percentage, usually 25 to 30% of people that sign up for a card and they hold a balance. Maybe it's not me or anyone else in the chat because we pay off our money on time, but most people in America, and quite frankly, across the world, they pay 25, 30% APR because most people are not the most savvy with their money. And so at the end of the day, credit card companies aren't predatory. All they're doing is, if you need the money and you're willing to pay off, 25% interest, to you and me, that sucks. But to other people that, just they don't know how to invest, they're not in real estate or anything, like, they need the money, right? So credit card companies are providing that liquidity, and credit card companies, banks also understand they could lose money, they could have defaults, but they're factoring in also into all of those assumptions, and then they're rolling it out, and it ends up being a very profitable business for the companies that end up doing it. So it's just a question of how Robinhood's going to unveil it and play it out. Okay, so here's the part I think where they're talking about that advanced pro version for Robinhood.
Last question I'm seeing right now. First off, love the handle No Stress Invest. I wish investing was no stress. That would be great.
Oh, they said your name, No Stress. That's awesome. That's so cool.
But it always is. This is a good question. Will you ever have guests on the show? First question there. We eventually want to have some guests on the show. It's a combination of technical and just kind of getting support on the production team so that we can pull that off flawlessly. But we have a good Rolodex of guests that we would love to bring on the show. Also, will you ever drop news of any Robinhood app features launching on the show? Maybe show off the new advanced web app that Vlad has mentioned. I'm just going to say stay tuned. Stay tuned. No Stress Invest. We're getting close to being able to show that off, but internally we've seen it. It's fantastic. Looking forward to getting it out to the world. But generally speaking, we not only we want this show to be successful, we want to grow this show. Maybe we can get to a point where we can maybe do this every day, and maybe get some content out there for traders and other folks. And
as long as cameras work in the beginning.
I just think that's the price you pay.
So that's Robinhood's new little podcast they're doing every week, the Robinhood Weekly Market Recap. I'll put in the chat. So so you know how he said we've seen it internally and it looks really cool. That's the same thing that the chief brokerage officer, Steve Quirk, at a conference with Piper Sandler, I think a month ago, he was asked about it as well. And he was like, the team's working really hard, dude. And like, it's going to be good. I think they're going to blow everybody away. I think Robinhood understands product better than most people. And they're going to blow people away. And that's going to be another reason to upgrade to get gold. And I think everyone freaking out about how they're giving 3% of the credit card. Quite frankly, these concerns are by people that have not done a lot of financial modeling on cards. Definitely has not looked into Robinhood's books and how they have all these different levers they can pull to monetize a user. And so they're just like saying, well, no one's ever done it, so Robinhood can't do it, without actually looking at no one ever did commission-free trading either. And then you got to give them somewhat of the benefit of the doubt here, especially when they've increased net deposits by 200% in a year, from 4 billion to 11.2. Like, I think Vlad knows this is his year. And worst case scenario, Q3, if the stock does drop, they got $1 billion in buybacks that they can authorize. So if we fall back into the low 20s, which every time we get to the high 21s, we bounce, Robinhood can buy back, 30, 40, $100 million worth of stock, 10% of their $1 billion of buyback, and continue to keep it going. And that's not to mention if Bitcoin runs. Dude, if Bitcoin runs, this thing is going to a different level, because if Bitcoin runs, we are going to be printing money. We made $127 million of revenue last quarter just off crypto. That's not going to be the same this quarter. This quarter is probably going to be 80 million in my projections. But if Bitcoin runs to 100K, that's probably going to go back to 150 to 200 million. So I think there's a lot of levers towards the end of the year that could help for Robinhood. I indirectly use my credit card with interest to buy Tesla at 184, hopefully pay it off in the next month. So I talked to a guy, actually, ironically, at the Robinhood event in New York, who was saying that he was able to use his credit line to buy stock, and he had 0% APR for like 12 months. So he was able to pay it all back at the end with the gains from the stock. And that is risky to do, right? Because it's kind of like taking a loan, but you need the stock to go up to even to pay back the loan, even though it is a quote unquote interest free loan. But most you have to find ways to work around that, because a lot of brokerages don't just let you plug in a credit card to transfer money in because they need the actual money, right? So there's like different ways to work around that. I don't suggest it because it's not always the easiest way to navigate these situations. But there are ways to get money from credit cards to invest. You just have to really make sure you're able to pay back the money, and that the stock goes up that you invest in. It's not necessarily a margin loan because the brokerage isn't giving you the money. It's like JP Morgan Chase or some random credit card that you just opened up. Like there's a sign-on bonus and stuff. There's like he was describing he used the credit card to get a credit loan on a different credit card to get the stock loan. And then the stock he invested in did so well, he paid back everything and he had the gains. So he pulled off some like crazy shit. But otherwise, I think going down the margin route makes more sense. The good thing about margin as well, in the context of like the brokerage, is that it's a collateralized loan. And that's another question they asked the CFO. They said, hey, would you guys be willing for Robinhood to assess the credit limit of the gold subscribers using the assets in their Robinhood account? So let's say you got $1 million in your Robinhood account. Obviously, you're probably good for more than $10,000 of a credit limit. Which is a really unique data point, right? That's a data point that most banks don't have. They just have your credit score. But a Robinhood can say, well, this person has 5,000 shares of Apple. Like the worst case that happens, we maybe make an agreement where we can collateralize some of the credit we're giving with their Apple, which then it becomes a margin loan, but it could be like a little bit of a gray area in terms of how they navigate that. Or we just think if you have 5,000 shares of Apple at a $50 average, you're a smart enough human being where you're not going to go delinquent on your credit. So like I think that's another way they could improve the data around the underwriting process, which would be different than some of these other credit cards that are out there. So yeah, I guess we'll see what happens with Robinhood into earnings in August. Okay, I think that's it for me, guys. One last look at the stock market. Rocket Lab at 565, Palantir actually green after hours. Nice to see that. Bitcoin, Germany is officially done with their Bitcoin. They sold out 57,667. And then SoFi right here, 696 after hours. Nvidia, 129. And then Tesla, I think it ended at 249, 248 on the day. I was doing some math the other day, and I realized I talk for 30% or 27% to be exact of the hours that I'm conscious. So I sleep for like 5-6 hours, which means we're left with what? 18 hours of being awake. And then out of that, I speak for about 6 of those 18 hours. So about a third of 5 to 6 hours, 27 to 30% of the waking hours I'm alive, I'm talking. Literally, because I do 2 streams a day. Then I make the YouTube video. So that encompasses about 6 hours. Then on Fridays, it's 3 streams, right? So like, and then other days we're going longer. Like today we did the market open for almost 4 hours, right? So it's a lot of talking all day. And in the midst of all that talking, I have the nerve to ask a question like, is the Bahamas in Hawaii? So I guess that's just what happens when you're talking all day. You have to pontificate certain questions and just throw your thoughts out there. you just kind of have to when you're talking that late. All right. Cool. That's it for me. No Palantir weekly tonight. I think we'll do the Steve and Chris pod that we've been meaning to do around AI, hopefully this weekend, because this one is an important one. And Steve and I are on the same side. Chris is on the other side. So hopefully on Saturday night, I can get it. We were supposed to do it with Steve last week, but he got busy. So if we can do them on Saturday, that would be fun. We can't live without you talking to Mitt. I appreciate that. At least you're not calling them gyros anymore. Well, see, you're wrong, because I'm still calling them gyros, gyros, whatever it was. Dude, like, it's ridiculous. Oh, how many followers did your mom get? Dude, she was so happy. I didn't get to tell you guys. She had like 130 subscribers or something. Where is, let me get her link. Yeah, so I thank you for everyone who subscribed to her channel. She was so happy. She was like, did you mention me on YouTube? I was like, I don't know. Maybe I don't know what happened. Let me pull it back in the chat for those who want to check it out. But she was so happy. So that was fun to see. Where is her link? Let me pull it up right here. We did word of the day in the morning. It was indisputable, but it was another word that means indisputable. It wasn't literally indisputable, but it was a word that means indisputable. Okay, here it is. Wow, she got 400 views on this now. Okay, so you guys basically doubled the views. Yeah, got 131 subs. That's awesome. She had like 50 before, so she almost 3x'd it. So thank you guys. Really appreciate it. It was fun. She's gonna put out podcasts with me, and then you guys could watch that. Me and her will probably do a podcast on our channel. That'll be something that you guys will enjoy. Cool. And you still no, okay. So on SoundHound, real quick, Gem. I know SoundHound's up. I don't know why. And everyone in the chat that says look at SoundHound, no one knows why it's up. They're just happy it's up. So this is why it feels meme-ish to me. It's like it's up this week a lot. The only thing I know is they expanded into Europe, but no one who said check SoundHound has put a headline in the chat for why I should look at SoundHound other than it's AI and it's up 50%. That to me seems like exactly what happened back in February when it ran up to $10 and then it fell back down. So yes, it's up. No, I don't have a position. No, I don't get excited about this company because I have no idea why it's up outside of the fact that it's up. So I don't know. Maybe this one is meme-ish. Maybe there's something real here, but it's up, which is nice. I have no idea why it's up right now. But this one is doing well today. It's the new agreements with Euro automakers. Yeah, and so like that's cool. I don't know what that means for revenue. I don't know what that means for profitability. Like SoundHound, the financials on SoundHound still are not amazing. Dude, it's a $2 billion company trading at what? Price to sales of like 100 or some ridiculous. Like it's out there. It's a little bit expensive, I would say, but it's up. And so if you like SoundHound, then you've made some money on it if you got in that $2, $4 range. See, even Arrows, right? I don't know. I'm glad I got in at 398. No one knows why they've invested in SoundHound. They're just like happy they're in it. So if you're in it, then that's great. You got some gains and maybe you just let it ride out. But I have no idea why SoundHound deserves to kind of be pumping the way it is. Thoughts on Teladoc used to be big for me, but it's so down. Surely AI can turn around. No, I don't think AI turns around Teladoc. Me and Steve looked at Teladoc deeply, but we came to the conclusion that it's not exciting. And that was when it was $20. Now it's at $9.39. Maybe we take another look at it, but Kathy sells like 300,000 shares a day of Teladoc. So I don't think Teladoc's super exciting. And there's no really AI thing that changes telehealth. Like the problem with telehealth is it was a COVID thing. And now we're done with COVID, right? So unless this bird flu thing puts us back at home, I don't know if Teladoc is that exciting. It is a quote unquote small cap, I guess. So maybe it runs with rate cuts. But outside of that, I don't think there's anything that interesting. Did you talk about Kathy selling Zoom on the market open? Yeah, she's been selling Zoom for like 2 weeks now. So she's officially got rid of most of her Zoom. Does she post baby videos of Amit on her YouTube? No, there is one baby video of me on YouTube. I'll try to find it later. I have to find the link, but I uploaded it a while ago. It's like a clip of me and my sister, like in the crib, and like she's singing and like I'm yelling. It's like a really cute video. I'll show it to you guys one day when I find it. T-Doc is just an app on Palantir Foundry. Yeah, literally. Amit, are you in Enovix? No, I'm not in Enovix, but people who have been in Enovix have done really well. So Enovix got saved this year because they got 2 really big deals with Samsung and probably Apple for the VR headset. So that's good for them, but I never loved the financials of it. This is one where you really have to see the vision, and the market's been giving them the reward for executing against the vision. Financials aren't there yet, but the financials hopefully will catch up. It's a TJ Rogers company, similar to Enphase. So now it's a little hard, dude. It's up like 300% this year. So it's a bit tough to get super excited about Enovix now at $18. But at like $6, $7, that's when most people were excited about it. Okay, cool. That's it for me. Thank you, everybody, for being here. We'll be back on the market open on Monday. I think we'll probably have a stream on Saturday or Sunday. But Monday we'll be back 8:45 a.m. Next week is earnings for a bunch of companies, not the big tech names. Let me just check real quick. Next week, what are we looking at? Next week is what, July 15th. Okay, so this is what we're looking at next week. Here's what we got. The big ones are J&J, Bank of America, Domino's, Netflix. That's a big one. That'll be on Thursday, 18th. American Express, and then Goldman Sachs on the 15th, and BlackRock, and Morgan Stanley, and PNC. So we got a bunch of banks, financials. Netflix is the big one. And the week after that, here's the website for those that want to see what website I'm using. I'll put in the chat. The week after that is going to be huge, dude. This is going to be the week. Look at this. On July 23rd, Microsoft, Google, and Tesla. I don't think Google, Tesla, and Microsoft have ever done the same day. I want to. This one might not be accurate because they sometimes they project ahead of time if they don't get the exact date. But if that is accurate, could you imagine Microsoft, Google, and Tesla in one day? That's crazy, dude. Verizon, TSM on the same day. And then you got Apple and Amazon the week after. Then you got Chipotle, AT&T. I mean, this is just Spotify. It's on the 23rd. This is going to be a big, big week for Q2. And then the week after that, that's when we have the Metas, the Apples, the Amazons, the PayPals. Yeah, there's going to be a lot. Airbnb, DraftKings. We are back into earnings seasons this week or starting next week. And it'll be fun to see. All right. Thank you, everybody. Appreciate it. I will see you guys on Monday for the market open if I don't see you over the weekend. And we'll be back and keep it going. Thank you, everybody. Have a good weekend. Bye-bye.